Well, good morning, everybody. How are you? Happy Thursday. Hope everybody's doing pretty well. Donuts in hand, coffee in hand, orange juice, Coke, whatever you do in the mornings. Some green mixed up drink that you make, maybe. All right, let's see here. Everything's up and running. Okay. Hey, maybe, just maybe, this is truly an outside shot here. We have a little relief rally going on. Uh, Very possible. Yesterday at the close, um, we drew this line here at 397 and a quarter, which was no, big surprise. We need to get we needed to get over these candles right here to get started, and now it looks like we're over this downtrend line here. So, okay, let's rock, huh? There's still one big hurdle that we need to clear, and that's going to be this candle right in here, because here we have this low, excuse me, we have this low high, and then it failed. It just died right there. We came back, ended up making a lower low, and now we have a low. We're going to call this the highs right up in here. And we came back and made a higher low, and now we're trying to run up a little bit. So um, just maybe, we have a relief rally. So a relief rally. Let's talk about, let me put this line up here too. This is going to be the next little area right in here, and honestly, let's make this as fat as we can possibly make it. And if I could make this fatter, I would make it fatter. Um, let's see, can I duplicate that? Sure, I can. Why not? Can I do that one more time? Whew. There's always a different way around the mountain. Always a different way. There we go. Just got to be creative. This whole area right through here, this is going to be another pretty major resistance area here. So here's the way I'm looking at this. Possibly we're going to have to really monitor what the market is doing, monitor the VIX, make sure that that's hanging in there, hanging down there. We want that hanging down there. So if we do get a relief rally and we can get through 408, 20-ish, if we can get through there, and it's not going to be just some run up, it just not in this market. Let's just say the higher we go, the more I'm going to start looking for short setups, the higher we go. So if we do manage to get through here, goody gumdrops, let's take advantage of the relief rally. The higher we get up here, and I'm sure there'll be some sort of, speed bumps in here. It certainly looks like there could be, in this area right here. But if we get up here, again, I'm going to be watching for sell signal to maybe put on some shorts here. Okay, now let's talk really crazy. Let's smoke some dope here, get high as a kite, and let's dream. And I'm being serious about that. Let's dream. And I'm not being serious about smoking dope and all that stuff. I'm being serious about dreaming. If we get through this area up here, then I'm going to be a full-blown bull. But come on, do you feel like that's going to happen? I don't. So bottom line, let's take advantage of any kind of relief rally the market can muster up. The higher we move, be prepared for some short setups, okay? There we go. Quick look at the Qs. Qs are doing fairly good. I don't think they're doing quite as good as the SPY is doing, but it's trying. We'll give it a little ribbon for trying. FNGU is trying to construct a bottom down here, which is the FANG stocks, the FANG family, and a few more in there actually. So they are trying to they're trying to move up. So we'll keep an eye on that. UVXY, this is the VIX instrument that I watch right now. And, you know, if we just do something like that, you can see we're coming into that possible support area. If we were, you know, you can draw this, and every trader is going to have a little different way to draw it. So maybe if you do something like that, you can see we're below that trend line. If we were to cut out this little move to the downside, smooth things out a little bit, we get more touches with this one. Touch, 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 touch. You can see we're below that support line, which is now resistance. So looking at the UVXY, it looks like the fear is kind of pulled out of the market a little bit. I would probably be watching around 14. If we start to get a bounce off 14, then what that could do is start leading up to a possible breakout, which is going to put the screws to that bullish relief rally and give us some short setup. So today's going to be kind of important. The end of the day, that last hour of the day is going to be pretty darn important. So if the bulls can hold on, just keep a sharp eye on the last hour of the day. Make sure there's no great big sell-off, unless the sell-off is early on. Okay, with that said, let's take a look at a few charts. Again, good morning, everybody. Good morning, Thomas, Phil, Greg, Gregor, Gavin, Mike, Ron, Joe, Bob, John, Peter. Hello, Peter. Mark, Al, Mike, Steph. How's everything going today? I hope all well. All right, so let's go here. Bumble acted pretty good yesterday. Acted really good yesterday. We've come off these lows. We've rallied all the way up to 29 and a quarter, hitting this resistance area. Wow. I love it when price obeys support and resistance. I love it when price obeys moving averages. I'm a moving average fan. This is the typical chart that I'm going to use right here. This is a rounded bottom breakout, and you can see we hit that dotted deuce up here, 200 period moving average, and that is, whoops, that is not what I wanted to do. This is what I wanted to do. There we go. It's the 200 period moving average. The average type is front weighted opposed to simple or exponential. And it's the average of the low opposed to maybe last price, which might be used. So it's a little different arrangement there. I find it extremely useful. So anyway, boom, we run right up into there. We pop back down to the downside, giving us a nice PBO type setup. PBO stands for pullback opportunity. We land on the 50 period moving average. The trend indicator here is green, and we get a bullish engulf yesterday. I can't not look at this chart. I can't not put it on the watch list here. It's looking too good. Rounded bottom breakout, the ultimate target for a rounded bottom breakout is the 200 period moving average. That's it. That's the ultimate target. Now, I'm not saying the stock can't go higher, but if it goes higher, it no longer can be called the rounded bottom breakout strategy. So here we are up. It is a 3/8 trap. Note right here. This is kind of cool. 3/8 trap. Boom. Have it right there on TC2000, telling me it's a 3/8 trap. I can also do something like, I'm not going to do this with every chart. Okay, I get a lot of people sometimes emailing me about this stuff. It's a rounded bottom, what I call a rounded bottom basic. No tricks, no whistles and bells, nothing there. It's simply a price action within the fences of the rounded bottom breakout. So, okay. So what we got here is a nice little inside day or inside wick, it looks like so far. Um, Watch for that entry right in there. Targets to the upside. We're clearly going to have to clear 29 and a quarter. Then I'm going to be looking at 32.50 and then maybe 35.90 or 36 up here. With a stop right now at about 26.20. If it's bought higher, then the stop would have to change. MNKD doing a pretty good job. It's actually coming off down here. This is the 1,000 period moving average here. And this line right here, that's the 1,000. This line right there, that blue line, kind of dark blue, that's the 500 period moving average. So what I like about this is we've come off that major move. Well, I'm not sure that's a major moving average. Yeah, let's just call that the 1,000. 500 period moving average, though, we can put that in the major category. Here we popped up above the dotted deuce and the 200 period moving average with a stop about 405. I always round numbers. I don't take the time to put this exact where I would think it might go. I come close. I always round either up or down. So right now I would say a stop at 405. First target around 490, 565, maybe 620 up here. What does this give us? You know, if we're looking at that, we're looking at a 48% playground. I'm not at all suggesting that we're going to make it all the way up to $6, but with a 48% playground, I'm sure we can have some fun and have a good time at recess. DKNG, now I'm currently long this one. I'm looking at 15 and a quarter, followed by 17.40. Of course, the 50 period moving average is going to be important. So if we get through that, again, I'm looking at 17.40, but we've got to get through 15 and a quarter first, with a stop right now of about $13.50. KRE. KRE is coming off the bottom. KRE is I'm not sure this is an actual pinball setup. I'm not going to go look and find out. Pinball setup would simply be price between the T-line and the 34 EMA. Like I say, I'm not going to worry about that right now. We are coming off the 500 period moving average. It does look like we are constructing a bottom right there. Does look like we're constructing that bottom. We are above this high. What is this high here? Looks like we're gapping up this morning a little bit above that 62.10 area with a target of 64.10 and 65.30 up here. I think based on the way it's acting, if bought, we're going to have to raise that stop up a little bit. And I'm probably going to work with something around 61.60. Wells Fargo, this is another chart that I'm currently long in, looking at 46 and a quarter, then 48.35. Of course, we're going to have to get through that 50 period moving average, which will produce some sort of a speed bump. Speed bump can be right below it, right at it, or just slightly above it. And what I mean by a speed bump, it's something like this. Green. So let's just assume we're just going to fly right up there. It may take a few days. We're going to get up there, and then somewhere in this area right in here, we're going to see a little consolidation. Consolidation could be choppy. That's just the simple nature of a major moving average. We've got a nice bull kicker set up here. We've also got a nice double bottom on this one, and this little pattern right here, right there, there's 3 bars. That's what we call a Fig Newton chart pattern, which is a bullish candle, not so bullish, and bullish candle, kind of like the Fig Newton cookie. Looking pretty good right in here, looking real good actually. One could even make an argument of inverted head and shoulders. I think you could make that argument and get away with it. So nice looking chart. FITB, banks are looking good right now. Banks are coming off the bottom. How high they go, I don't have the foggiest clue, and neither does anyone else. Let's just simply follow the charts, pay attention to your rules. If you need help with the charts or rules, this is what the trading rooms are for. So here we're coming off that 500 period moving average here. Here's another one. We could make that argument of an inverted head and shoulders. Here is another Fig Newton chart pattern, which it's a bank. You're all kind of doing that right now, sort of. Not all of them looking like that Wells Fargo. That's perfect. But they're all kind of in that area. And you can see we're breaking out of this candle back here. We're also breaking out of yesterday's candle with a 309, 310 target, and then 40 bucks up here about that 50 period moving average. Based on the way price is moving up here, I think I will go ahead and just raise that stop a little bit, which that will be adjusted if I say I bought it. I'll adjust that based on the price. I buy it because I have some maximums. Like I really don't like to buy something with a stop more than 5-6%. I just can't make sense of that. I don't use just a percentage stop. I use price action, and I either will or will not buy it, or I will or will not adjust the stop. But somewhere I've got to have some price action logic in there. Here's Zion. Zion is looking good. Again, the banks are they're kind of kicking up a little bit. There's that inverted head and shoulders support off the 500 period moving average. Trendicator has turned green. We've got a Fig Newton chart pattern in here. 57.80 with a target. 60 up here. 50 period moving average. Looks like a pretty good target up there. In this market, I think it's going to be important, which it's been important. First of all, I think it's not a when price moves up nowadays. Right now, it's if price moves up. So I don't mean to be so negative about it, but I want to be realistic about it. We are in just a simple. The key word here is relief rally, and a relief rally comes from a downtrend, just a little bit of relief to the upside. And right here, this right here would be a relief rally, and it just failed. So nothing about these charts are telling me that, hey, the bottom is in the market, the bottom is in banking or anything. Not yet, anyway. Like I said earlier on the market, the higher we go, we could start looking for some short patterns. But if you're inclined to take advantage of the relief rally, then there's definitely some charts out there. What else on this? Yeah, I might have to move that stop up, and I think I'll come up here into this candle's wick, just slightly above the T line, maybe. XLE. Look, there's a lot of energy charts. I mean, I could put up energy charts like crazy, and they look great. Okay, if you don't know which one maybe to look at, take a look at XLE. It's the ETF for the energy sector, and it's here. Here we are breaking out, just acting absolutely beautiful with a target of about 90.64. I think it will, based on the current move right now. I think I'm going to move that stop up to about 84.30, and then that'll be adjusted depending on what the price I buy it, whether I can bring it down a little bit, or maybe I have to raise it up a little bit. ZIM is setting up. ZIM. Here's a nice little pop out of the box setting up right here. This chart has done a really good job of the low, high, higher low, higher high, higher lows in here, a another higher high, a higher low, and now a higher high. It's done a fantastic job right here. So that's how bullish charts are created. They're all, any bullish chart you look at it. It doesn't matter which one. You can't prove me wrong on this. It is 100% of the time. Any bullish chart that makes some big run like this, it's done with um, lows to highs to higher lows to higher highs to higher lows. Oh, it could certainly dip down a little bit, by the way. It could certainly come back and then come back up, and it will continue the low, high, higher, low thing. So here we are above that 50 period moving average. Little resistance right here that the bulls are doing a good job of putting it behind it. So looking good. 75, 65 up here, then 80, 90 up here for target. I'm going to leave that at 68.50. Looks pretty good. FIS. This is another rounded bottom breakout type chart, and it is sitting in that 3/8 trap area here. Look at that 104.70 where it stopped in the recent past. And now we're trying to get through the dotted deuce here. And I think if we can get through the dotted deuce, I think this 104.70 won't make a difference. I think we're going to 108.50. And then, of course, the 200 period moving average is sitting right here. Definitely going to have to raise that stop. Definitely. So a stop is to protect your money. A stop is not to be traded with. I call it stop trading. But there are a lot of people that will buy a chart and just put their stop close so they don't lose money. And really all that is a sign that you have trouble charting. And this will get you nowhere. You'll die of 1,000 paper cuts doing something like this. So what I want to do is let the chart pattern play out, but we don't want to be in it if the chart pattern starts to break. So you have to know what a few chart patterns are. You have to know what a few candlestick signals and patterns are. It's not hard. There's just a few there. Really, there is. So we have a J-hook set up right now. So what would tell you this J-hook setup is not working? Well, right now, I think I'm going to have to come in. And every chart is a little bit different because the actual makeup of every chart is slightly different. Not every chart has a candle placed right here. Not every candle has this doji in here. Not every candle has an inverted hammer here. It's the picture you see. So I'm kind of thinking to myself here, if we get below about halfway of this candle, if we got below here, then I wouldn't like it. So here's something that I suggest would be a good idea. Is if you have a way to actually put some artwork on the chart like that, I would suggest you do it. Now, sometimes you may have to copy this chart with a program, maybe like Snagit, and then you can draw on it from Snagit or something like Snagit. We've got this cool little tool that we can do it live. But if I take a look at this chart, let's see what we have here. If we get below this line, then what we can do is draw a line down like this. Well, who in the world would want this chart if something like this was to happen? Who in the world would want to buy that chart if we got bent down there? So the advantage of drawing on charts is truly amazing, and every single person here has that ability. There's free programs, there's programs you can buy, there's all sorts of things. You just have to take the time to do it. So I always ask myself, why do I like this chart? When I answer that question, then I know exactly where I would not like this chart. And that's an example right in here. So anything below 101 would not like it. BTU, this is the last one. BTU is setting up. We're taking on or challenging that 50 period moving average right now. So there very well may be a little bit of chop right in here. That is just the nature of a major moving average, whether you're coming from bottom up or the top down, doesn't matter, works out 99% of the time. There's just going to be a little bit of chop around those major moving averages. If the bulls can keep it together, and if we can hold above that area, which 24.15 is the area that I'm looking at. Anything above that, I'll be happy with. Then we'll look at 26.70 and about 30.70 up here for a target. All right, I better get out of here and get this taken care of. We'll see everybody back here in about a little less than 15 minutes. Thanks very much for listening in this morning, and we'll see you all. Take care. Have a great day, okay? Later.